All right, let's talk CODX. This stock has been on an absolute tear lately. But you know the question everyone's asking? Is this a rocket ship just getting started? Or is it a classic case of flying too close to the sun? We're going to dig into the technicals and see what the story is. So let's kick things off with this number right here, 75. That's the technical score our source material is giving CODX. I mean, on the surface, that looks incredibly bullish, right? But here's the thing. A single number almost never tells the whole story. So is this a green light, or is there something else going on? And yeah, there is something else going on. This is really the heart of the whole story. The best way to think about CODX right now is like a high-performance engine, just redlining. The upward trend is undeniable, it's powerful, but at the same time, the dashboard is just lit up with warning signs that it's seriously overheating. This is that classic Wall Street showdown, raw momentum versus some pretty serious caution. Okay, so first things first, let's pop the hood and take a look at what's actually fueling this engine. What's giving this trend so much horsepower? Well, for starters, look at this, the volume. We're talking about trading activity that's more than 18 times its recent average. This isn't some slow, quiet drift higher. No, this is an absolute explosion of interest. It's a huge tell that there's some real conviction behind this move. And if you want to know who's in the driver's seat, just look at this chart. On one side, you have the buyers, that's the plus DI, sitting way up at almost 59. And on the other side, the sellers, they're down at a tiny 8.8. I mean, come on, this isn't even a fair fight. The buyers are in total control, and they have their foot slammed on the gas. And believe me, the good news for the bulls doesn't stop there. You've got the Arun indicator, which measures trend strength, pegged at a perfect 100. The price? It's blown past every key moving average. The MACD, your classic momentum gauge, is positive. Oh, and the stock is up over 100% in just 2 weeks. The big takeaway here is that this is absolutely not a fluke. This is a powerful, confirmed trend. But, and this is a big but, this is where the plot thickens. When an engine runs this hot for this long, you gotta ask yourself, can it last? Is it sustainable? Are we about to see this thing overheat? It's time to check out those warning lights. All right, now for the other side of the coin. Let's look at the cautionary signs in the data. These are the indicators that are basically flashing red, screaming that maybe, just maybe, this amazing run has gone too far, too fast. And before we jump into the numbers, let's just quickly define overbought. It's a key concept here. It doesn't mean a stock is guaranteed to fall, not at all. It just means the price has shot up so quickly that it's kind of like a stretched rubber band. It keeps stretching, sure, but the odds of it snapping back, a price drop or even just a pause, are getting a lot higher. Okay, Exhibit A for the caution camp. This is the RSI, the Relative Strength Index. Now, the classic rule of thumb is that any reading over 70 means a stock is overbought. Well, CODX isn't just peaking over 70, it's all the way up near 80. This is a huge sign that this buying frenzy could be running out of steam. And look, if the RSI was a flashing yellow light, then this next one, the Money Flow Index, is a full-blown, blaring red siren. The MFI is kind of like the RSI, but it also considers volume. And it is sitting at an almost unbelievable 98.19. I mean, that is just extreme. It's telling us a massive amount of cash is poured in, pushing this thing deep, deep into speculative territory. And this quote from the source analysis really nails it. So you have these things called Bollinger Bands, which basically create a normal trading channel for a stock. Well, CODX isn't just touching the top of the channel. It's trading 154% outside of it. Now, on one hand, that's a signal of a major breakout. But on the other, it's just a sign of excess. It shows you how far off the charts this move really is. Okay, so let's recap. We've got this incredibly powerful engine, but we also have all these warning lights flashing. So how in the world do you navigate a situation like this? Well, you need a map. And for traders, that map is all about key price levels, the specific spots on the chart that could act as turning points. And here it is. This is our roadmap. So if the stock starts to pull back, the first level to watch is that pivot point around 74 cents. Think of that as the first line of defense for the bulls. If that breaks, the next major support level is down around 61 cents. Now, looking up, the big wall to climb is the resistance at 90 cents. If, and it's a big if, the buyers can push through that, then the old 52-week high at 1.27 becomes the next target. These are the levels where the battle will be won or lost.
So we've got the bull case, we've got the bear warnings, and we have our map. Now let's put it all together. The analysis lays out 3 main ways this could play out from here.
Scenario 1 is the bullish breakout. Pretty simple. Momentum just keeps on winning and the price smashes right through that 90-cent resistance. Scenario 2 is the bearish pullback. This is where those overbought warnings come home to roost and the price falls back to test those lower levels we talked about. And finally, Scenario 3, neutral consolidation. The stock basically just chops around sideways for a while, catching its breath and figuring out what to do next.
And really, it all boils down to this fundamental conflict. On one side, you have the bull case, driven by absolutely insane volume and every trend indicator flashing green. On the other side, you have the bear case, pointing to these extremely overbought readings and a price that's just stretched to the limit. It's the ultimate tug of war between unstoppable momentum and, well, financial gravity. So, what's the final takeaway from our source material? Well, it suggests that even though the stock could go higher, the risk of a pretty sharp drop from these levels is really significant. When you weigh the potential reward against that risk, it seems to be signaling that this is probably a time for caution, not a time to be overly aggressive. And so that leaves us with the one big question. You have this stock with a monster engine, full of momentum, but the dashboard is covered in flashing red warning lights. Which force is going to win? The incredible upward trend or the signs of total exhaustion? That's what will decide the next chapter for CODX.